Donald Trump's tariffs are causing the biggest stock market crash since 9/11. But is this all a part of the plan that Donald Trump has been looking at? Because he has been talking about the tariffs and, in fact, saying that the United States has been getting ripped off for quite some time. So, part of the reason why he's implemented these tariffs is because of this fact. Now, don't take it from me. Trump also shared this video on True Social that Trump is purposely crashing the stock market. Now, let's listen in to hear the reasoning behind why Trump is potentially purposely crashing the stock market.
Crashing the stock market by 20% this month, but he's doing it on purpose. And this is why Warren Buffett just said Trump is making the best economic moves he's seen in over 50 years. Now, here's the secret game he's playing, and it could make you rich. So why is he doing this? To push cash into treasuries, which forces the Fed to slash interest rates in May, and those lower rates give the Fed the ability to refinance trillions of debt very inexpensively. It also weakens the dollar and drops mortgage rates. Now, it's a wild chess move, but it's working. Now, you're probably wondering, what about his tariffs? Well, I'll tell you, it's a genius play. It actually forces companies to build here to dodge them. It also forces farmers to sell more of their products here in the US to bring grocery prices way down. We've already seen this with eggs. Now, remember, 94% of all stocks are owned only by 8% of Americans. So Trump, he's taking from the rich short term and handing it to the middle class through lower prices.
So this is absolutely major here, and I think the last part is extremely important. Trump is looking at the overall stock market. It's owned by 10%. The 80% of the stock market is owned by the top 10%, meaning a lot of the boomers and the older generations, well, frankly, they own majority of the stocks, whereas, the younger and millennial class does not. But I think another unique aspect of this is the 10-year Treasury yield. So what this does is essentially looks at when the U.S. is about to come up and default potentially on the debt. So Trump and his team has been actively looking at this and trying to lower it beneath that 4% mark and has tried to do that very significantly. So what have they done with all of this? Well, they've been tracking it very closely, wanting it to get beneath that 4 mark because they need to refinance that debt. Now, Trump is pressuring Powell to cut interest rates, which would thus increase the 10-year Treasury yield or lower that 10-year Treasury yield. So the debt would become cheaper. So all of this interest that the United States would be paying would become less than what they are currently paying at this 6% interest rate. But now we're looking at a 4% interest rate as it is ballooned on down. But as my man Luke Groman is saying here, since late February, a 19% decline on SPX drove a 19 basis point decline on the 10-year Treasury yield. This is like pissing your pants to warm up in sub-zero weather. Feels great for a little bit, but in a few hours, you're dying of hypothermia. Must devalue debt, GDP first, or else root canal with a shotgun, which, I agree with 100%, is that this is attempting to essentially eliminate and solve the debt problem. Currently, the United States debt is equal or just about to the GDP of the country. Now, historically speaking, when this happens, fiat currencies fail. And Donald Trump and his team are well aware of that. So they want to make sure that this is something that does not happen, right? Because why would you want the US currency to fail? Then, you would look at all of these different scenarios. You would look at that and say, essentially, well, then you would say, well, the US dollar was losing power. And then, we lose our essentially power to make all these great decisions or make the decisions and become the global reserve currency or continue to run as the global reserve currency, excuse me. But what did all this happen? When did all of this happen? Well, it happened when China And the United States, essentially, look at this chart. This thing is insane here. When Trump implemented the 50% tariffs on China. So, phase one, the deal took effect early on in 2020. China started rampaging and raging up. And then April 9th, a 34% reciprocal tariff on Chinese goods happened with, quote, some exclusions. Well, since that happened, we see this other chart here from Zero Hedge where the US government 10-year yield starts to increase yet again. And the generic first ES futures starts to crash dramatically. So you start to see this decoupling once we have the US China tariffs start to get into place. But what are some of the negative effects of these tariffs that we could have? Well, goods and services could skyrocket, and quite frankly, it's more than likely that this will occur. Why? Well, there's cheap labor across the pond. You got to think about all these things, right? If you look at Trader Joe's down the street, for example, I was telling a buddy about this yesterday. If you go to Trader Joe's and you look at the frozen food section, I don't know about the full on meats and everything else, but if you go to the frozen food section, a lot of that says made in Canada. So, and I live in Florida majority of the time. So you got to think going from all the way from Canada all the way down to Tampa, Florida, where I'm at, it is cheaper to make that all the way up there, put some preservatives in it, and then take that and transport it, most likely in a refrigerated car the entire time, taking all that power, taking days at a time to transport that down to Tampa, Florida, opposed to just making it locally and doing that. So there is some issues with that, and that can cause some potential issues with the supply chain and everything else. So what are we doing to resolve that? Well, of course, we're implementing a lot of these tariffs, but Trump needs to essentially force this rate cut, force some sort of QE, quantitative easing. So for those who don't know, quantitative easing is essentially money printing, lowering interest rates. It's lowering the cost of capital. And so Trump has been openly just going at Powell, saying that they need to cut interest rates. In fact, headlines are saying Fed's Powell steady on rates, warns about inflation as Trump demands a cut. We have Trump saying on Truth Social, coming out and saying that, hey, this is, quote, the perfect time for a rate cut. But yet we have no movement just yet. But if you look at this CME Group, they do a great percentage of whether or not interest rates are going to be cut at the next meeting, and they go about that, right? So this is a great website to kind of look and track. Now, it looks like there is going to be a 34.4% chance of easing at the next meeting, which is in May. So coming up literally 1 month exactly from today. Looks like that has increased to a 34.4%. Before, this was a 90% chance that they were not going to hike. And now we're seeing this now at 34.4%. In fact, we could actually check. I could fact check myself live here on air. Okay, so 64%. Oh, wait, no, that was in June 25. So these are looking at the different ones. Excuse me. My apologies here. But, whoa, we're looking at now a 50%, a 50% chance of this going to ease. So you see, I looked at this earlier today, pulled this up for this live stream, and now all of a sudden we getting to a 50% chance that this is going to cut. And I think that this is going to increase over time because we're saying Powell and Trump essentially at odds here. Powell is really trying to say, hey, inflation is not over. We need to keep interest rates high. But Donnie T says otherwise. He thinks that inflation is done with. In fact, he's trying to make inflation go away or say it's going away. He's lowered gas prices. He's done other things. But inflation, if you look at the numbers, is really not gone away just yet, folks. It really hasn't. It's still trucking along there. And we have Powell saying that the tariffs are going to increase inflation, at least in the short term. And quite frankly, I agree with him because, we need to get all this manufacturing and everything settled into the United States prior to anything along these lines kind of occurring here, right? We need inflation to come down and we need manufacturing to come to the United States, but it's going to be a gradual process. This is not something that happens overnight. So Trump implementing these tariffs is essentially playing hardball right away. But hey, you know what? He's doing what he can to try to bring more goods and services back to the United States. So Fed's Jerome Powell said Friday that he expects President Donald Trump's tariff to raise inflation and lower growth. He actually added that there's a highly uncertain outlook because of new reciprocal levies the president announced Wednesday, keeping the Fed on hold for interest rate moves. We are positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be appropriate path for monetary policy. So they're looking at this 10-year yield, and we showed you guys that a little bit earlier, at least courtesy of the screen grab from Luke Groman, where we're sitting above 4%, just slightly there. But they're looking at the 10-year yield, how the market's reacting, and how everybody is essentially reacting here. But we've even got my favorite bear of all time, Peter Schiff, saying that Trump's tariff is a misguided solution. So let's listen into an alternative opinion here as to what is going on in this tariff situation.
Claims that the world has been screwing us over. They've been taking advantage of us. And that's why we have these huge trade deficits. And so what we need to do is level the playing field with tariffs. And that's going to solve the problem. And now they can't take advantage anymore because we're going to make them pay for the privilege of supplying us with goods. But it's our privilege to be supplied. They're the suckers for supplying us with goods that we can't really afford to pay for. The reason that we have trade deficits is not because foreigners have tariffs or because they're cheating. That's got nothing to do with it. The problems are in our economy, not the foreign economies. We are uncompetitive in most of the manufactured goods that we import. That's why we import them. If we could produce all those goods cheaper, then we would be doing it.
Exactly that. I mean, I do agree with his point about that if we could theoretically produce these goods cheaper, we most likely would be doing it. Why not? If it was cheaper, that's the route of action we will always take. But the problem lies deeper here. But I think what we're seeing is that we're seeing a phenomenon kind of really start to take off here when it comes to Trump's tariffs and everything else, right? Everybody has a somewhat of an opinion on it, including Tim Draper here, which I think is unique for what he is seeing. He's saying, I'm always for free trade, but I totally get it. Trump is doing what needs to be done. The other countries have been taking advantage of the U.S. for decades of benevolence, and they should understand it's a two-way street. Weak leaders like Socialist Xi will allow their egos to get in the way of the nation's progress, but most countries' smart leaders will take a practical view and lower their own barriers for reciprocation. If they don't, the U.S. will get more income from them. I think the Fed is missing the big picture. They should be opportunistically lowering interest rates for the onslaught of U.S. jobs rather than living in fear of stagflation. Innovators thrive in this kind of environment. We expect to invest more of Tim Draper Associate Venture money in the U.S. now. And all scenarios are good for Bitcoin buyers. It is inflation resistant moving forward. Look, I'm not going to dive into Bitcoin too much here on this one, but I think it is unique of what Tim Draper is saying is, look, it's America first. We should be looking at this as a positive. We should have faith in the American people, American businesses to come back and become stronger from this. And I think that that's going to be the case. Right. I mean, we already see President Trump really pressuring Jerome Powell. And I think that this is something that is unique from, Trump, that he essentially wants the lower interest rates and wants to continue this over time. He's really pushing for that. And he wants that 0% interest rate environment. Although I think that that could be a negative in the long term, it creates somewhat of an asset bubble. He needs that right now to get everything pumping because of what we've seen. Like I said, we saw literally the worst day in the stock market on Friday comparatively to 9/11. Literally, which is absolutely insane that those words are being muttered right now here as we're sitting on April 7th, 2025. But Powell is saying that he thinks the larger than expected tariffs will likely boost the inflation and slow the growth. So Powell is looking at this as somewhat of a bear on innovation and everything going forward for the US. But I think that it is something that is unique. And I think that we will see Donald Trump and Powell start to be at odds here. But what I do think this will come from it is, what I do think what will come of it is that we will see Jerome Powell cut interest rates at least in the May meeting. Now, if you like this content, I'm going to start doing some more live streams about what is going on in this macro economy as we've got some craziness going on. So smash the like button, hit the subscribe button, tell a friend to tell a friend, and we're going to get on this train as we're going to start breaking down everything macro. And thank you guys all for tuning in.